Paul, can you tell me if the collapse of ARK and ARK Invest is over yet? What's going on?
So Cathie Wood's thesis in investing is disruption. She believes that the companies that she has in her portfolio are disruptors to the world and technology, and she wants to be on that train. I get it. Makes perfect sense.
Sounds amazing.
Oh, it is amazing. I mean, a lot of these companies have done amazing things. I mean, look at Tesla. It's absolutely incredible.
So you really harp on disruption. I thought you were overplaying it, but no, in the ETF, their first sentence is they say, these companies are going to change the way the world works.
Yeah, and I always joke with people and say, how many companies have really changed the world, the way the world works? So when I look at this, I think to myself back 20-some years ago when I was first getting into investing.
Yeah.
I believed in disruption. I believed I want to invest in companies that were doing amazing things.
This is the dot-com bubble? You got in some of these?
I got sucked into a few of them. Not as bad. I mean, Global Crossing, oh my gosh, I literally lost 100% of my money in Global Crossing. I didn't buy everything like everybody else did. I wasn't buying MarketWatch.com, things like that, but I still bought into the whole, listen, these companies are making amazing things. Let me go buy into them. I didn't know yet about the financials of the company. I didn't understand that an investment is the present value of all future cash flow. The question we have is it's not what you're buying, it's what you pay for what you're buying.
As a young investor, this never crossed my mind.
Of course not.
It was just, people told me just buy what you like. That got me into some companies that sounded wonderful, and I just hoped the price went up.
And that is a wonderful way of starting out your analysis. Look at companies that you like and love.
Oh, yes.
Go look at them and see, hey, I know what I'm getting. I'm getting something I like and love. What am I paying to get that? That is the question. And in my opinion, in the ARK investment world, it's a little bit harder. Does that mean she's going to be wrong? No, of course, there are going to be some companies that, I look at Tesla. I believe Tesla will be around for a long time. I think they've gotten past the hurdle right now of bankruptcy. I think I have a Tesla that's supposed to come in 2 to 3 weeks. I love Tesla as a company. You have a Tesla, Mo has a Tesla. We all love it. The question is, are we paying the right price for Tesla? I don't know. Now, if you're new to our channel, we have an 8-pillar process. Seth and I came up with this 8-pillar process 2 or 3 years ago, because he said to me, Paul, when you look at a stock, what are you looking for? And I rattled off 8 things.
Yeah, it was very dumb. I said, it
was a phone call.
Yeah, I was like, what are the things? And then you came up with this process, which spoke to me and a lot of our viewers are kind of like infamous for, Paul. You know this, the 8 pillars.
And Seth and I, when we did this, it was kind of like, okay, well, let's just put this in an idea. Let's put this in some software and show people. So let's look up, if you look at past videos, the 8 pillars are 5-year PE, revenue growth, profit growth, share dilution, debt to free cash flow growth, and a market price of the valuation based on free cash flow. These are all the things that are involved. Obviously, the lower you pay, the better. But some companies can grow a lot faster than other companies. And I do believe that in ARK, these companies have a lot more revenue and profit growth potential than your stodgy Procter & Gamble, Macy. All these other companies are just boring companies. HPQ, come on, give me a break. Those guys are barely growing. But I own HPQ because my opinion is when a company is very exciting to everybody and the stock price skyrockets because of it, there's overvaluation.
Well, yours and Buffett and Munger's, of course.
Correct.
Shared opinion.
So as an example, you brought up HPQ. Let's look at HPQ. HPQ in the 8 pillars process, it's all 8 check marks. It's selling for less than 10 times 5-year profit, less than 10 times 5-year free cash flow. They're buying shares back like crazy. 36% of the shares they have bought back in the last 5 years. That's incredible. They have low debt. They have growing cash flow. This boring, stodgy company has revenue growth, net income growth, and free cash flow growth, and low debt.
If you're playing around at home, this is as simple as there's a business down your street. It's for sale. What would you pay for this? What do they do? You would want to know these numbers. So, Paul, what about the companies in ARK?
So, in our software, we have the 8-pillar portfolio. What this allows you to do is it allows you to put in up to 50 companies in your portfolio, and it'll tell you how it looks as one big company. So what I did yesterday was I went in and I put in the top 20 or so holdings into ARK, into my own portfolio of ARK. So guys, these companies don't even have enough data for us to evaluate in many circumstances.
That makes it tougher to make a decision.
That makes it harder because, guys, are you going to give the big contract to the rookie who has no experience whatsoever, or the guy's been around 5-6 years going, you know what, this guy's performed and getting better every year? Which one's less risky, right? Same thing here. Guys, look at this number. You remember Hewlett-Packard was selling for 9.9 times free cash flow over the last 5 years. These companies as a whole are selling for 1,500 times.
Break that down for me.
Break that down for you?
Yeah.
For every dollar of free cash flow, you can buy HPQ for $10. For every dollar of free cash flow, these companies have to pay $1,500 for that. Now, you might sit there and say, yeah, but they're growing. Okay, well then why not pay $2,000? Why not $3,000? At some point, you have to realize that every investment is the present value of all future cash flow. And even if it's doubled every single year for the rest of the time, it's still going to be a hard thing to get your head around. And this is only how many companies? 1, 2, 3. Yeah, 21 companies. Their market cap is $1.4 trillion. Guys, go look at another $1.4 trillion company. Go look at Microsoft, which is $2 trillion. I'd rather buy Microsoft for $2 trillion than have this. They're selling for like 30 times free cash flow. I mean, give me a break. To me, it is so obvious. So when Cathie Wood says, I would never bet against innovation, I'm not betting against innovation. I'm betting against valuation. I believe in innovation. Innovation's incredible, but I'm not going to overpay for innovation, ever. I will look at every investment as the present value of all future cash flow. That is exactly what our stock analyzer tool does. When people say to me, Paul, you don't get growth. The very first line of my stock analyzer tool that tells me what to pay is revenue growth. It's the very first line. So if you're here and you bought ARK at some point at $150, $160, and now it's currently at $55, $60.
Oh, it's lower.
And you're
lower,
like,
Paul. Why?
This might be why. And I welcome you to us if it didn't make sense to you. And if this makes sense to you, just learn a little bit more. Because guess what? 20 years ago, it didn't make sense to me. But then over time, I was like, wait a second. Why did this not work? These were innovative businesses. Why did they? The internet was the biggest thing to happen to the world, in my opinion. Bigger than fire. Bigger than fire. And guess what? 98%, 99% of those internet companies went to zero. Amazon, which survived, went from $113 to $6 in the crash. And it survived. That's what I'm trying to sit here and say, guys. It's not about shorting innovation. It's not about betting against innovation. It's about betting against valuation. You have to bet against overvaluation. When I say bet against it, just don't buy it. Wait for calmer times. Yes, could stocks skyrocket? Absolutely. But I'd rather buy a company at a price I know and understand than overpay hoping that it works, because eventually it will stop working. Eventually the music will stop. Eventually the fat lady will sing. And with ARK Innovation, I don't think the fat lady is done yet. I think we got a lot longer to go.
She's not even warming up.
I don't think she's even warming up. I think ARK will end up with much bigger losses at some point in the future.
If this speaks to you, click this video right here about more investing strategies.